Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, the Australian dollar continues to its bearish course, and as you can see over the period of the last 24 hours, the market is now staged a further down test and closer towards its objective of 75.80. It is viewed from a technical point, the market still has further room after seeing a low of 76.08 to challenge this level of 75.80, but for those that are short, do be on your guard as we could see a rebound from there as bids might be firming up slightly due to the fact that we're getting slightly oversold. And since the decline from 78 cents, we haven't seen any real profit taking in that period as the market's been selling off. And especially trading 12 days on a sideways band is now slowly getting closer to, as I say, to the objective. And that sell any rallies now towards 76.80.90. So as the downtrend comes in and moves away from 77.45.55. But as you can see, little has changed over the last 24 hours for the euro, although the US dollar has managed to stage a modest gains after rebounding from the low of 94.14 to settle this morning at 94.38 to the index. Some of us may not know, but the US dollar measures the greenback strength against a trade-weighted basket of 6 major currencies. Now the euro is weighted at 57.6 to the euro, so you can see now as the dollar index is slowly gaining, the fact is that we should still sell on rallies towards either 116.75 or where the resistance mainly caps at 117.05.15, but the outcome expected to see a move towards 116.05 or lower to 115.5 and reassess from there. The dollar yen story is pretty much unchanged as it continues to trade sideways and locked in a band of 113.15 to 113.85. Overall, you can view that the market, since the rejection from this level of 114.5, is still slightly on the bearish case. But my strategy is to still buy dips, and I still expect to see the market rebound from 112.80 and look towards the top side of re-challenging this level of 114.5 to 70. We could get a break of that eventually to see a move through to a target of 116. The pound is weaker overnight, and due to the fact that the Prime Minister Theresa May plans for Britain's exit from the EU faces a crucial test today, when lawmakers will try to win concessions from a weakened leader on the government's legislation to sever ties. It is yet another battle for Theresa May after scandals that has brought questions about her leadership into the open. So the market will be very, very much on the jitters in case we see a further sell-off. But as you can see, at this point, I still don't have a strategy really for the pound as it trades in a 130 to 133 band over this period of the last couple of months. With the downtrend coming in now roughly around 132.20.40, could see the pressure back towards 130 figure 20. And if we get a break beneath there, then we could see further weakness unfolding to 128. Well, the gold outlook rebounded slightly overnight and after tackling the top side, printed a low of 79. In the US, the House of Representatives is expected to vote this week on a major tax reform bill amid uncertainty over the outcome of the bill, though, after the head of the House Representatives Tax Writing Committee said on Sunday that it may not accept elimination of a federal deduction for the state and local taxes. With a 52-seat majority, Republicans can only afford to lose 2 GOP senators. As Democrats are widely expected to vote no, it's up to Vice President Pence, who has to break the tie. So we'll keep an eye on that. But overall, technically, I still feel the market will take on the 79.81 and shrug off the plummet that we saw on Friday and look towards 88.90. Dips are still a way to play as a strategy with 70.72 as a base. Wrapping up with oil, as you can see, the market is still trading sideways and still struggling to take out the level of $58 a barrel. With the immediate target holding to 56.50, you can see here from the technical point that we are preparing for a move down. Now, one thing to add is that Baker Hughes reported last Friday that the number of oil rigs operating in the US rose by 9 to 738. This is the highest in almost a month. So this may put a bit of a jitter on the markets, as in supply could increase. So let's see how the market plays out. If you are trading from a short side, keep stops tight, as a break above 58 could see a rise to $62 a barrel. That wraps up today. Thank you very much for joining me, but as always, look out for the intraday report that will be released shortly.